no doubt that we've got to catch up on all those businesses that should have become insolvent even without COVID, and that's going to be around 2,500 businesses. On top of that, the ABS did a survey about 3 weeks ago where they spoke to business owners, and 10% of them said that they intended to shut down their business at the end of stimulus. Now, 10% of Australian businesses is somewhere in the order of 240,000. So even if we have a quantum below that, we're looking at a vast number of businesses that don't think they can survive in the current environment. And that's what we're needing to deal with.
There's the people who just leave things too late and things escalate out of their control too quickly. But then there's also the opportunists. Is this making it easy for, say, some business owners to phoenix, to leave unpaid bills to creditors, wrap up the business and start again relatively scot-free?
Yeah, you're absolutely right. The risk of phoenixing here is significant. And when phoenixing already costs Australia at least $4 billion a year, the potential for people to pull assets out of businesses and walk away and not be investigated for their actions becomes really significant. The risk of abandoned companies in this environment is going to become very significant. And so we are looking at a whole series of risks that are going to continue to grow in this environment where money is going to have been taken out of businesses before it really should have been.
Who's going to be the most hurt by this moratorium?
Well, look, I think it's going to be perfectly good businesses. I think we're going to see lots of businesses who are desperate to keep sales going through the door, continuing to try and trade with businesses that they really do suspect are already insolvent. So that desperation element of trying to keep sales up is going to lead them to making, unfortunately, bad credit decisions. That's where I think we're going to see the greatest strain in the economy.
So what's your advice to them?
Well, so you can certainly move to things like cash on delivery. I mean, that's the ultimate way to ensure that you're fully protected in that environment. But you need to engage in discussions with your trading companies about whether or not they're in distress. You need to ask them the hard questions about whether or not they're relying on JobKeeper, whether or not they've got forbearance from their landlords or their banks, and just really engage them in that piece of understanding how much stress is in their organisation. And if it is, you can start to work with them on arrangements that mean that you will get paid or you can control how much they owe you.
Normally when businesses go bust, the biggest creditor is the ATO. Is the ATO likely to be the biggest loser in this?
Oh, there's no doubt that the ATO is going to rack up billions of dollars in unpaid taxes. The other big loser is going to be the federal government's Fair Entitlements Guarantee, where they're going to have to pay employee entitlements that aren't being honoured by these businesses that have nothing left. So between the ATO and the Fair Entitlements Guarantee, the federal government is no doubt going to be picking up the vast majority of this tab.
Why do you think the government is listening to this when obviously it leaves so many businesses exposed to bad credit and that could take them under as well?
I think, unfortunately, the government has taken quite a simplistic approach to this. And I think it simply boils down to that. Rather than look at the depth and the complexity of the way insolvency works, they've kind of taken an easy way out on that. In the early stages of this crisis, we completely understand why that was undertaken. We've had 6 months to have a smarter solution to this, and unfortunately, that's not being listened to.
And what's the smarter solution?
The smarter solution is to actually establish some fairly quick reforms that we can put in place, which include things like streamlining liquidations and a range of other changes. And these were all recommended by the Productivity Commission back in 2015.
John Winter, thank you very much for your time.
Thanks, Elise. Great to talk to you.
If you're a business affected by this moratorium, we'd love to hear from you. Get in touch via the website. To the markets now, which saw a pretty good gain today. The ASX 200 ending the day up 1%, and the Aussie dollar currently buying just under 73 US cents. And Junbei Liu from Tribeca Investments join me. Junbei, apparently some good news out of shopping centre owner Scentre Group today. It said its rent collection has gone from 30% to over 80%. Surely this is a good sign?
Oh, absolutely, especially considering Victoria is still in lockdown. Many were scratching their heads how is that possible? But certainly things have turned for the shopping centres, and we see general buying and positive sentiment towards the property trusts today.
Well, possibly the lockouts that they started in doing against some other companies maybe help some people pay some rent. Sydney Airport's capital raising seems to have gone pretty well as opposed to Qantas's a couple of weeks ago.
Oh, absolutely. So we just heard back the retail participation, that's a retail investor participation in the raising, was over 60%, which is pretty high compared to Qantas was just under 30%. Of course, those retail investors well in the money, and then those extra shares that didn't get bid for was well overbid last night. So share price is down a little bit, but look, still looking pretty strong.
And overnight, we saw some interesting comments from Donald Trump in relation to China. And then today, we've seen the evacuation of Australian journalists out of China as well. Has that rattled the market as well at all?
Look, and it's interesting. Markets come off a little bit after the news, but look, in general, it seems the equity market is, and investing in general, is looking past those geopolitical headlines. It seems what's most important at the moment is about how quickly we can recover from the corona-related disruption than some of those political headlines. But at some point, they will create a problem. But at this point, it's really all about how long the lockdown how quickly it can be lifted.
And of course, as long as China keeps buying our iron ore, that will assuage anyone's worries.
That's right, absolutely.
Junbei, thanks so much.
Thank you.
AMP's troubles are continuing to mount, copping a damaging credit downgrade today. It comes just 2 weeks after shareholder pressure saw the chairman and another director take the fall for their roles in installing Bo Pahari as head of AMP Capital, despite allegations he sexually harassed a subordinate. But big shareholders are accused of hypocrisy for not demanding the resignation of Mr Pahari, who remains in a senior role earning millions of dollars a year. Andrew Robertson reports.
It's a scandal too far for a once mighty Australian icon, which could end with it being broken up. But the head of AMP's second biggest shareholder is unapologetic for not demanding the sacking of the man at the centre of that scandal when the allegations against him hit the financial headlines.
We did what I think all shareholders should do, and we tried to protect our investment, not exercise a moral judgment.
An investment that was being battered by the news that Bo Pahari had been promoted to be head of AMP Capital, despite being docked $500,000 for the sexual harassment of one of his staff. He's since been demoted back to his old job, still earning millions of dollars a year.
The single most important thing I do every day is talk to my people. They're fantastic.
Labor Senator Deborah O'Neill, who 2 weeks ago revealed more sexual harassment at AMP, is in no doubt Mr Pahari should have been fired.
Profit at any price is not commerce, it's exploitation. And what we've seen with the continuing engagement of Mr Pahari in that role is dollars trumping the reality of the human experience.
And that's focused attention on those same shareholders who forced out company chairman David Murray and Mr Pahari's boss, John Fraser. Nearly all the people the ABC has spoken to have suggested that because he's a big revenue generator for AMP Capital, Mr Pahari was held to a different standard.
Shareholders are inherently conflicted by their desire often to continue earning dividends from the company. So they're often unwilling to go too far and air the organisation's dirty laundry.
There was enough courage to seek some change, but not enough courage to do what everybody knows should be done.
Warren Staples says Exhibit A for shareholder hypocrisy was banks ripping off clients, which led to the Hayne Royal Commission in 2018.
Which bank cheats some of its most vulnerable customers in their hour of need?
There were lots of instances where the misconduct in banks had been made public and none of the shareholders had really been that unhappy because the banks were making them high levels of profit.
In Commonwealth Bank's case, investors only stepped in and forced the resignation of boss Ian Narev when a money laundering scandal threatened those high levels of profit. Which goes to the heart of why anyone buys shares in the first place, and that's to make money. It's for that reason that AMP investor Simon Mawhinney says he understands why there's a perception that somebody who generates lots of money, like Bo Pahari, is protected by shareholders.
I think we are conflicted. I wouldn't like to hide behind that.
Mr Mawhinney says he moved against the board of AMP because it underplayed the severity of what was revealed about Mr Pahari's behaviour. As for protecting Mr Pahari, he points out that bad behaviour happened in 2017.
It's incredibly unusual for boards and management teams to be expected to go back and retrospectively put their stamp on decisions made in the past. And this whole concept of double jeopardy, where you don't try someone twice for the same crime, is potentially relevant.
Mr Pahari's presence at AMP links him to that event in 2017. It's not like he's pulled up stumps and said, look, I'm really sorry, I made a mistake and I'm going to move on. He stayed there.
Senator O'Neill and Simon Mawhinney are in agreement, though, that if Mr Pahari was to be sacked, 2017 was the time to do it.
Andrew Robertson there, and that's all from The Business. I'm Elise Morgan. Good night.